What's going on, everyone? Welcome to the channel. Today we're breaking down SNXX, the Trader 2x long SNDK daily ETF, its wild performance, its volatility, and its upcoming 8-for-1 forward stock split. We're also going to talk about what leverage ETFs actually are and how something like SNXX can help or hurt your portfolio. I'm Troy, and this is Stock Market Media. So first off, what is SNXX? SNXX is a 2x leverage ETF. That means it's designed to deliver twice the daily performance of SNDK. If SNDK goes up 1% in a day, SNXX aims for about 2%. If SNDK drops 1%, SNXX aims for about down 2%. This is a daily target, not long term. And that's going to be a reoccurring thing. Remember, with this and with leverage ETFs, not a long-term hold. Leverage ETFs reset every day, which makes them more powerful to short-term trading risks, but riskier for long-term. So let's talk about its volatility, because it's had some highs and some lows, but it has been soaring this year. SNXX has been one of the most explosive leverage ETFs this year. 52-week low, $25.11. That's where it started its inception in January. Now, at its 52-week high, we can see $204.56. Right now it's trading for about $170.25 as of the market end on Friday. But that's more than 700% from bottom to top. Recent trading has been just as wild. SNXX has daily swings of 20 to about 30% in intraday ranges for about $10 to $15. Performance has been massive. 1 month, 162%. 3 months, 332%. Since its inception in January, 639%. This is the kind of movement you only see in leverage ETFs, folks. Huge upside, huge downside, non-stop volatility. Now, the cream of the crop, the 8-for-1 forward stock split. What is a forward stock split? First off, a forward stock split increases your share count and lowers the price per share, but your total value stays the same. Just like a reverse stock split, which decreases your share count and increases the price per share, but your total value still stays the same. So if SNXX is trading at 160 before the split, which will happen on June 1st, then it'll trade for about $20 on June 3rd, its X date. 1 share becomes 8 shares, same total value. This doesn't change the ETF's fundamentals, it just makes the price more accessible and keeps a fun, comfortable trading range for retail investors like you and me. Now, what is a leverage ETF? Leverage ETFs like SNXX use derivatives like swaps and borrowed capital to amplify daily returns. But because of that daily reset, they don't behave like normal stocks over time. Here's a quick example. Day 1. SNDK goes up 10%. That means SNXX aims for about 20%, so it's going to go up 20% that day. But day 2, let's say SNDK drops 20%. That means SNXX drops about 40%. The underlying stock, which is SNDK, goes down about 1%, but SNXX still goes down about 4%. That difference is called volatility decay, and it's why leverage ETFs can drift downward even when an underlying stock ends flat. So, how can this help you? How can it hurt you? Let's talk about the upside. Amplified gains, capital efficiency, tactical trading. It's great for momentum. This is not a long-term hold. These are for short-term swings. Capital efficiency. It sets it at a more affordable rate and a more affordable price, so that way you have better options for trading. And amplified gains. Like, this is one of those things that if you catch the right move, it can double the daily return of SNDK. Now, how can it hurt you? Amplified losses. A negative move in SNDK results in a negative move in SNXX. So if you're looking at 5% down on SNDK, you're looking at 10% on SNXX. Then you have volatility decay. So even if SNDK ends flat, SNXX can still lose value. It's not a long-term holding. And then you still have the most important of the daily trade, the emotional pressure. Daily swings of 10 to 20% can cause panic or overselling. And we want to go in and sell high. That is the goal here. We want to buy low. We want to sell high. So here's the bottom line. SNXX is a 2x leverage ETF tied to SNDK's daily moves. It has seen extreme volatility with a 52-week range of $25 to $204. It's undergoing an 8-for-1 forward stock split, which changes your share count, not for your total value. Leverage ETFs can be powerful short-term tools, but they can be dangerous long-term holds due to volatility decay and amplified losses. If you're going to trade SNXX, treat it like a short-term trading instrument, not a long-term investment. Thanks for watching, and let's get into the charts, guys. And if you like this kind of content, be sure to like, comment, and subscribe. Let me know what you're trading. And I'm not a financial advisor.